Good evening, everyone. Welcome to Closing Comments here on December 8th. Let's jump right into our charts and see what happened in the markets today. First up, we got our February live cattle on the board. Today we did see this market bouncing out near the top end of last week's range. Prices did briefly poke up there towards 228, but still failing to get above that 20-day high that remains at 28.17. That being said, though, we are drawing a pretty solid line here right around 228, offering a good breakout point for the bulls to get this new uptrend rolling once again. In the meantime, though, we want to be cautious and slow play this thing while we did see this market putting in a little bit of resistance here at some of these overhead supply zones. So if we do get some offers rolling down here below 225.70, which was today's low, we could see this thing flush down here towards 215 to 220. We should have plenty of buyers waiting down here in this area to try and get back into this market that they may have missed this recent move. Be a good spot to pick up some leftover buyers and try and turn this thing higher once again. For a potential trend reversal here, we'd like to see a higher low get put in either in this area or at this rising 20-day moving average as it's starting to climb back out of here. We'll have to wait and see how this market unfolds over the next couple days. We would prefer to see that pullback put in a higher low, offering a good risk point to get a new uptrend rolling into year end, but we'll have to wait and see if we get it. However, if the bulls are able to wake back up and keep last week's momentum rolling into Tuesday session tomorrow, and we just need to get some bids above 228.17 to really get this market rolling. If we're able to see that, the bulls will start heading up here towards 232.5 and try and fill this overhead gap that was created back here at the end of October. Anyway, about it, we do still have some good signs of a trend reversal here, and that the bulls may have a little bit of life in them before the year is up. But we want to encourage everyone to find some low risk trading points before getting involved. Keep a tight leash on anything if we do have some momentum breaking out here above 228. It'll start heading towards that gap, but we still could see a little bit of a pullback here. Offering that first pullback and a new uptrend is going to be the best point to get involved for any sustained upside. In the meantime, we'll be monitoring this situation throughout the rest of the week to see if we can get that higher low, or we'll have to just wait and see if we get that breakout early tomorrow and keep this momentum rolling. Either way about it, good signs of life from the bulls and looking like we could be seeing a potential trend reversal in the works here. Just have to wait and see this thing, slow play it over the next couple days, and we'll keep an eye on that throughout the rest of the week. Over to the feeder market now. We are going to take a look at January here, but today will be the last day we're covering January feeders as this volume has started to roll over into March. This March contract will be the new front month going forward during tomorrow's closing comments, but we'll get to that then. For now, we're going to focus on January still. Today's action, we did sell off briefly down here below Friday's low. Last Friday's action showing a nice little tight range day, only trading about a $3.50 range. We did see this market start to flush down below that prior day's low and our bear pivot at 336.65. Did see this thing settle back here off of the lows today, but looking like we might be getting that pullback underway. This feeder market did get above this 20-day high and that 50-day moving average, so two really good signals for a potential trend reversal here. This first red day here that we've seen this week is the start of just that pullback. We want to see this market kind of find support either somewhere here between 320 and 330, or see if we can find some support at this rising 20-day moving average as it's coming back out of here. If this market is able to put in a higher low over the next couple days, that should offer a good risk point for this trend reversal and see this market start to climb back out of here and get this big picture uptrend back on track. Markets want to find support down here below, put in that higher low, then we're going to start chewing through this overhead gap. If this thing isn't able to continue with today's selling pressure and we just see this thing reverse right back here above 340, look for the bulls to try and push through this gap and fill it up there at 348.5. That's going to be target one for the bulls, and from there we should see some good upside start to climb out of here. In the meantime, if this thing does start to sell off and we have some early selling pressure tomorrow, I encourage everyone to slow play this thing, let this market kind of balance out and show signs of that higher low getting put in somewhere down here before committing to new uptrend positions. Either way about it, this cattle market is showing good signs of life here, and we could be seeing that upside get back on track sooner than later. So continue to stick with us here throughout the rest of the week, and we'll monitor that situation as it unfolds here. Like I said, though, we will be going into that March contract tomorrow. That'll be the focus for the rest of the week as we are starting to see rollover into this March 26 contract. Next up, we got our March corn futures on the board. Not a whole lot to be said once again about this corn market as it just continues chopping up here between 440 and 450. Today's action no different, just hanging out inside that prior week's range. Expect this range bound choppy action to continue until we can get a break beyond the edges here. Crude oil prices with another break off of that 50-day moving average. We did see a little bit of bullish momentum late last week, pushing up there, putting pressure on that 50-day moving average. But like we've seen about 4 times here over the last month or two, nice sharp rejection right off that 50-day moving average as the bears are continuing to defend that line. At the moment, we are trading down back here below 59.5 and our major moving averages. Look for the selling pressure to continue and the bears to keep grinding this market lower with a nice slow, steady bleed. And as they're going to set their sights back down here towards these mid-50s. Look for the downside to continue in that crude oil market. Next up, our equity indexes showing a little bit of selling pressure today, however, nothing major. We did see this S&P futures index still trading inside that prior week's range, nothing major here. We still have plenty of support down here near the low end of last week's range, and we did see a nice little rally here off of the lows into the close today. Selling pressure throughout the early part of the day, sellers getting active and pushing lower for most of the day before seeing that rally right into the close. Pretty similar action that we saw last week. Nothing super concerning here at the moment until we can break out beyond either side of the last week's range. That should lead the next move. If we see this market start to fail down here below 6,800, we could see this market continue back into corrective territory. But in the meantime, we still have plenty of buyer support here at the moment. Good signs of life here still from the bulls. One thing this market is probably looking forward to is the Fed decision here on Wednesday. We will have an FOMC statement as well as an interest rate decision. That's something this market will be looking to see how the Fed is going to be talking about the current situation, the current climate. I have to wait and see how that unfolds, but in the meantime, they're showing good signs of life here from the bulls across these across the stock market. Equities all looking pretty solid, pretty selective still. There's some pockets that are a little stronger than others, but here at the moment, looking like our indexes are still trying to hang on to this upside and keep this uptrend rolling. We want to see the S&P continue back above 6,900 to really confirm that. The NASDAQ needs to get up here above 25.8 to 26,000. Nice little breakout here above this supply zone that we had from the top, start of this sell-off that we had. Be a big win for the bulls. And the Dow was selling off a little bit here today, getting down below Friday's low. But with last week's follow-through day, this Dow index definitely is where the strength is currently. Look for this market to continue to find support. Each of our indexes, like I said, though, will be waiting for Wednesday's Fed decision. And we'll have to wait and see if there's going to be any volatility to come from that or any sort of directional moves to break. If we do get some sharp breaks down below these prior week's lows, I encourage everyone to take a step back and get defensive once again. But until we see that, this market is showing good constructive signs of life, and we could see the bulls start to climb out of here before the week is up. That's all we got for tonight. Thank you, everyone, for tuning in. We'll catch you tomorrow.